All right, we'll get started in a few minutes. Let's let some people step in. Today's a very important session, and today is one of those days where you can definitely learn a lot. All right. Alrighty, so I see some people tuning in. What's going on, Angel? Nice to see you. Let me just double check my audio and the visuals. Yep, everything looks good. All right, so let's go ahead and talk about today's session. You guys know the drill. We're going to jump into the Substack. We're going to talk about the analysis and the trade plan. We're going to talk about my performance today, and we're going to talk about how I'm going to be better for next time, because I do believe my performance today wasn't that good. My trade plan wasn't that good based on my analysis. And we're going to do a deep review of what happened today so we can perform better for next time. Before we jump into the chart, I do want to reiterate what I said in the pre-market live stream for my Discord folks, that we made a killing on Tuesday and Wednesday, and price action has used up all of the fresh levels on first test. The big one was yesterday's short, which ended up being a swing trade. We'll talk about the swing trade. And we also had supports that got used up as well in order to trap sellers. So in general, today is a day about protecting the profits that you made on Tuesday and Wednesday. That being said, there are still some great opportunities, and we're going to do a deep dive into the entry models and the actionable setups. What, another day of levels? Yes. This week's range, a lot of people were talking about it on the weekend. We were talking about it on the weekend. We should expect an increase of volatility. And that's definitely of no surprise that we're printing 100-point ranges every day. And if you remember April, this week is kind of similar to April, not the same thing. But if you remember April, this is how volatility looked. We're getting multiple A+ setups per day because the ranges are so massive, right? So they're giving you fantastic setups. And because volatility is higher, we're getting great follow through. So without further ado, let's go ahead and jump into the Substack for today. I'm going to link it in the chat. This Substack is completely free for everybody. This is my pre-market and this is my pre-market analysis, including my trade plan. So let me go ahead, link it in the chat, and let me go ahead and drag it over like so. Alrighty. So before we begin reading the notes, this is with futures. So this is ES and MES. You guys can also apply SPY options trading to these levels. And we'll talk about what I did for the main resistance for this week, how we wrote it up in SPY and how people were able to take advantage of that with options. But in general, futures is definitely the king of day trading because we have fixed risk to reward. Doesn't matter if price action is chopping or it's volatile or it's range bound or it's trending. We're going to get the same risk to reward every time, so long as we follow the process and follow the trade plan and obviously respect our stop losses, right? Obviously not ignoring or canceling our stop loss placements. So without further ado, guys, if you guys are ready, let's go ahead and jump into the analysis for today, October 16th, and we're going to talk about the trade plan, and then we're going to review my performance. Alrighty, so the bias remained neutral for today. The reason for today being neutral is because we're expecting price action to be stuck within the prior day's range, and the prior day's range is dictating who's trapped and who's in control. Within that range, both sides have merits as we play ping pong between the top of the balance and the bottom of the balance until there's enough external context of volatility to push us outside the box, right? And then somebody's going to get liquidated or somebody's going to get run over to the upside. Let's go ahead and talk about the context and short-term bias for today. So again, today is all about yesterday's range. It's important to note that the overnight range is only 42 points, which is large under regular circumstances, but in comparison to the rest of the days this week, it looks like volatility may be quieting down. But in general, today's all about yesterday's range. Let's fade the edges within yesterday's range. Above or below, one side takes the advantage. So above yesterday's high, the chart, and specifically the intraday charts, will flip bullish from neutral to bullish, and then a breakdown below yesterday's low will flip the intraday bias from neutral to bearish. Let's talk about the structure now and deepen and go into even more detail on why this matters. So again, the bias is neutral. Overview for today. The dip was bought on Monday at the FOMC low 66.11 via a classic false breakdown at significant support via exhaustion, resulting in trap sellers and a mean reversion to backtest the most significant resistances on the charts. I see some folks stepping in now. If you guys want to get this Substack and read along with me, it's posted in the chat. This is a free Substack. This is my free trade plan, my pre-market process and analysis that I send out to everybody for free in the pre-market. Yesterday's high, which is housed in such resistance 67.60.75 through 67.72.50 must defend. Vice versa, yesterday's low, which is a strong daily higher low, must hold or liquidation below. The bull focus for today. For buyers today, their main task is to defend the stairs they've taken up into 67.60.75 through 67.72.50. The structure will remain neutral because of these higher lows, right? So we zoom out to the macro time frame. You can see these daily higher lows. They're very, very obvious and very significant. Friday low, Tuesday low, Thursday low, and obviously Wednesday's low, we closed above it. If buyers want to attempt at breaking out yesterday's high in the strong macro resistance, 67.60.75 through 67.72.50, then this zone must hold 67.19.75 through 67.29.25 or the gap fill at 67.15.25. Below, we have 66.80 through 66.93, which can act as support for a potential daily higher low, but the best long setup today would be the false breakdown of yesterday's low, 66.53.25 through 66.61.75. Likely will have to be patient here as volatility could be picking up. Below yesterday's low, I will be watching for liquidation into last Friday's low, possibly, which is macro support to apply the entry models. That's the bull focus for today. Now let's talk about the bear focus. For bears today, defending yesterday's high is a must, as this is macro resistance to keep the chart neutral. A breakout above will invalidate last Friday's core breakdown triggers, in which we can head back towards all-time high direct. Holding below 67.41.50 through 67.47.25 can showcase a potential daily lower high being formed, which is great for sellers in order to make a move into the supports below. The goal is to break down into yesterday's low, react here, then break down 66.51.50. Let's talk about what happened, and then we'll talk about the trade plan and execution. So firstly, price action was unable to contest the prior day's high. This is exactly what you want to see if you're a seller, because again, we have to think of the market structures from a logical buyer versus seller perspective. If you're a seller today and we break out 67.41.50 through 67.47.25, the prior day's high is in danger. And because this zone already reacted on first test yesterday, we're very likely to head above it. And then sellers must trap buyers with a false breakout of the prior day's high. But if the market is to truly be weak, and if sellers are to truly be strong, then heading into this zone will not showcase that. It will be a bullish indication. And in fact, holding below the prior day's high would be exactly what you want to see if you're a seller. And the structure will remain as a daily lower high, right? So that's exactly what sellers managed to do today. 67.41.50 through 67.47.25 printed a false breakout of the overnight high, and then we printed a Fibonacci trap of this false breakout, and we sold off into the supports below. And also a very important note to make is that breaking out and making this zone resistance makes what happened today much more difficult. Because if we are to break out here, then 67.41 becomes support, and we have to see if sellers manage to break it down or not. But in general, because this zone has become support, what happened today, which is a full flush into the prior day's low, just becomes that much more difficult to do, right? So the fact that sellers held this zone was absolutely phenomenal. And if you shorted this zone, absolutely phenomenal play by you. Unfortunately, my trade plan did not have this, but it did have the false breakdown of the prior day's low. So that transitions perfectly into how do you formulate a trade plan based on all of the notes that we talked about, the overview, the bias, the bear focus, and the bull focus. How do you formulate a trade plan? And what are the entry models? Expecting continued range trading, but the spotlight is now on yesterday's 116-point range. Especially yesterday's high takes the spotlight today because it is macro resistance. If broken, will flip the charts bearish. This is strong resistance until proven otherwise, and I do not mind risking my points here. We want to continue to fade the edge and be patient for the best setups in a volatile range. Yesterday is a fantastic example. I can watch for the false breakouts of 67.60 through 67.72 at yesterday's high, 67.66.75. But if we go back to my analysis that I have in the bear focus, but sellers would love to sustain price action below the prior day's high and holding below 67.41.50 through 67.47.25 can showcase a potential daily lower high in order to contest the better supports below. So I do feel like I did fumble my trade plan a little bit by not including this zone as a significant area of resistance to look to apply the entry models, because it made sense, right? It made sense. If sellers were going to do what they did today, which is break down into the prior day's low, then breaking out 67.41.50 through 67.47 is not a good sign. It's just not a good sign. So that makes sense actually to bet your points here, but you can apply the false breakout entry model. So in case buyers do just cleanly break out this level and cleanly break out the overnight highs, you have the false breakout entry model protecting you, so you can have some extra confirmation that supply and sellers are active in this zone, right? Let's continue reading the trade plan. Essentially the same trade idea from yesterday. If this short fails, then I will not be shorting the market, as sellers can be trapped until all-time high prints a false breakout pattern. Obviously, we didn't break out the prior day's high. For longs today, I really like the false breakdown of yesterday's low at 66.51.50. Apply the entry models here. It's a very textbook long setup. If one is to be aggressive, the false breakdown of the 3:45 p.m. low at 66.80 through 66.93 support for a potential daily higher low can make sense too. This trade did not get activated, right? There was no false breakdown of the 3:45 p.m. low. We've had back-to-back massive home runs on Tuesday and Wednesday. Now is not the time to give away profits. Stay focused on the process, rinse and repeat. So here are the most significant supports that can change the intraday bias, and here are the most significant resistances that could change the intraday bias, right? Let's go back to the charts. So first of all, we have to understand the range parameters for the day, right? So we're expecting price action to chop or remain stuck within yesterday's range. Yesterday's like a gigantic 116-point range, right? So we're going to have to print another gigantic range if we are to break out or break down the prior day's high or the prior day's low. That's going to require some sort of volatility from an external piece of context, and that is a very low probable outcome. Trend days are the lowest probable outcomes on the chart. You don't get trend days often. Pretty much 9 times out of 10, my trade plan is going to say I'm expecting range trading today. That's what trading usually is from an S&P 500 perspective. 66.53.25 through 66.61.75 is the most important support on the charts, as it also houses the prior day's low. And if sellers break down this area, the chart will flip bearish. So if you're a buyer today, you must defend this zone. And as you can see, buyers are doing everything in their power to defend the structure. One thing that I will say about my trade plan that wasn't that great is I didn't include a possible predetermined entry model at 66.53.25 through 66.61.75. And with the benefit of hindsight, I do feel like that was a mistake, and I'll tell you why. So as we're selling off in a straight line into the most significant intraday support on the charts, that is exactly what you want to see if you want to play against potentially trapped sellers. We moved down 100 points in a straight line, right? And we completely flush out the 3:45 p.m. low. So anybody that's chasing a breakdown below the 3:45 p.m. low, anybody that's chasing a potential breakdown via the previous day's low, that's when the predetermined buy on first test entry model takes the spotlight, because sometimes you're just not going to get a false breakdown, or sometimes price action is going to react so strongly in such a volatile environment that you're not going to have enough time to literally market into the chart. I think today is a phenomenal example of what buying or selling a structure on first test means, right? Yesterday is another phenomenal example, but today is better because we tagged it and we immediately pushed back to the upside. So any longs in this structure made sense with a stop loss behind the prior day's low, because the markets and sellers are exhausting their range potential into the structure. At lunchtime, right, you have to be betting that the chart is going to enter free fall trend day down mode in order for lunchtime to simply head lower. It's already minus 100 points. We're already hitting the max limitations for the day. And you know that based on the analysis for today, we're likely to remain range bound within the prior day's range. So in a situation like this, the best long for today and the best longs or the best shorts in general are always on first test. The fact that the first test happened at lunchtime, it made the second test, which is where we got the false breakdown in the afternoon, a lot more tricky. And this is where I definitely should have just honestly ignored this setup, because the first test passed. But that being said, the setup still worked out fairly fine, even though we chopped out into the afternoon. So I'm going to bring over the Discord now. I'm going to speak about the commentary from today. And once we wrap up intraday, I really want to talk about the swing trade, because the swing trade is absolutely gnarly. It's monstrous. And we really have to analyze it. So let me bring over the Discord here. And keep in the back of your mind as well that Tuesday and Wednesday were the easiest trading days, honestly, of the year, I feel like. So Tuesday and easily the best risk reward return too. So today is really just about protecting that profit, which is something that's very important to keep in mind. Anyways, let's talk about today's callouts. All right. So at 12:55 p.m., I noted the reaction at 66.53 through 66.61. Remember, the first test of these levels, these extremely significant structures, are always the best, and especially when the opposite side is exhausting the range potential into it, right? So the first test, the predetermined entry model, I saw some of you guys just straight up buy this level, and that's phenomenal. Great stuff. Risk management here makes sense. Below the prior day's low, you place your stop loss below the prior day's low, and if you get flushed out, then you can look to trade the false breakdown of the prior day's low, right? But anyways, let's continue here. And by the way, if you didn't long 66.53 through 66.61.75 on first test, but your trade plan said trade the false breakdown, then don't get caught in hindsight, right? A lot of the review that we're doing for today is purely just for education and review. If your trade plan said trade the false breakdown of the prior day's low, don't beat yourself up. And anyways, the prior day's low false breakdown did get activated. At 2:12 p.m., the boss says the low is active, and let's look to apply the entry models. For me, in this situation, I honestly had poor execution, and I was not patient enough, and I failed to understand that the first test of this zone already played out. So I needed to be more patient, and obviously the range potential for the day is already exhausted. So chop into the afternoon or chop into the close was very, very likely. So key time here, be patient and apply the false breakdown entry model. I even said to myself, be patient, but I do feel like I rushed a little bit because I took the fill on this candlestick right here. And also, I was on the 5-minute time frame. Usually I'm on the 15-minute time frame, and I'm going to explain why I'm usually on that 15 versus the 5 minutes. But this is definitely a long that was rushed. After review, it was definitely rushed because I'm taking the long fill when there's not enough indication that the level has recovered. And because it's such a significant level, we really need to see good confirmation here, because if we're going to start liquidating via the breakdown of this most significant intraday structure on the chart, then it's really going to get violent, right? Anyways, so I got stopped out right here. with a new low of day, I got poked out on this trade. I lost -1R, but I'm very proud of myself because I didn't keep trading. I said that if this trade idea gets invalidated or potentially gets invalidated and I get stopped out, I'm done for the day. I'm wrapping it up. I'm heading out until tomorrow. I'm not going to start revenge trading here because this is what revenge trading looks like. Let's go back to the chart. In order to avoid revenge trading, you have to understand literally your emotions. I know it sounds really cliche, but you have to understand your emotions. Let's go to the 5-minute time frame and let's draw up that trade. So the reason for this trade being poor execution is number one, I rushed. I needed to be more patient. We didn't reject, we rejected it right here at 2:15 p.m. But in general, I just was not patient enough. I had a stop loss behind the low of the day right there, and I got poked out. And in a situation like this, how many people are going to start revenge trading, right? In a situation like this, when you get poked out, when your stop loss gets poked out by 4 points, how many people are just going to, well, buy again? A lot of people. And I don't think it's a wrong idea to look to buy again. But if you're buying again because you're upset that the market poked you out, or you're upset that you longed too early and the false breakdown criteria didn't present itself well enough, then there's a problem. That's going to lead to revenge trading. And revenge trading will lead to a blown account. Revenge trading will lose to -5R in one day. It will lead to -10R in one day. And then when you zoom out, right? And you know that price already reacted at this zone on first test. This was the best opportunity to go long for the day. And you already know that the intraday bias is slightly more bearish, even though it's still neutral. But sellers did what they needed to do today. You don't have to overtrade in that zone. Right? So I'm very proud of myself that I did not revenge trade today because we've all been there before. We've all done it. We've all lost, 5R in one day because we get poked out and we're just upset that the market was hunting our stop loss. Well, obviously the market wasn't hunting our stop loss. We just simply rushed the entry model. Entry model wasn't good enough until we get this beautiful 15-minute outside bar. And usually I'm on the 15-minute chart, but today for some reason I was on the 5 minutes. But as you guys know, the lower the time frame you go, the more noisy these candlesticks get. So if I was on the 15-minute charts, I probably would have avoided taking that fill early, and I probably would have just been completely fine in the trade, not taking the loser. Because on the 15-minute time frame, when you see that price action has been stalling out below the low for 20 minutes now, and 20 minutes below the low is important because if the market was truly volatile off of external context, we should just keep heading down. We should not chop for 20 minutes below the low. But when you get confirmation that the level is recovered via this outside bar right here, and then you get the Fibonacci trap at 3:15 p.m., that's how the false breakdown should have been executed, right? So in general, I definitely rushed, and today is a good learning experience. That being said, though, this trade did not result in much risk reward at all. Because again, the first test of this zone already played out, right, at 12:45 p.m. And sellers already took decent intraday control, right? It's not confirmed that they have intraday control, but we're getting lower highs on the intraday time frame, right? So let's just quickly talk about how you should have executed that trade. Let's say you got long at 2:30 p.m., right at 66.5325. Your stop loss here is very wide. So this is also a good reason to just skip the trade. A 23-point stop loss is very tough to trade with. But anyways, you do hit your 1R, which is nice at least. I wanted a deeper pullback and I got it. However, the risk reward was not as good as that first wick of the resistance range. Yes, the resistance today was definitely better. The short today was definitely better, just from a pure risk reward perspective. But this zone up here is really tricky because if 67.4150 through 67.47 failed and we did break out, I do feel like you still have to risk another 1R at this zone, right? So you have two options here. You could risk 2R or you can just focus on the latter. But for today specifically, based on the analysis that we did in the pre-market, we knew that sellers holding this zone at 67.4150 instead of 67.60 would showcase potential strength from sellers. So that would set you up in a phenomenal position of risk reward. And obviously, you don't have to just sell the level straight up. You could have waited for the false breakout to present itself. And the false breakouts definitely did present itself via the overnight highs. So in general, my trade plan was very lacking today, which is good because we get to review and we get to be better for next time. I'm afraid to activate my execution marks. The daily loss limit, yes. For me, I have a -2R as my daily loss limit. I only lost 1R today. But sometimes you have to read the charts in the given situation. And we already knew that the highest probability trades are already played out, right? You shorted the resistance up here, or you long support at 12:45 p.m. / 12:30 p.m. Everything else is lower probability because the structures have already played out, right? The structures have already played out on first test. And the first hour of the day has played out too. Obviously, we're heading into the close here. The first hour of the day has played out, meaning the best time slot to get in with a position has played out, right? When the most money is being fluctuated. So other than that, that's pretty much all for today. Now we're going to quickly talk about the swing trade because the swing trade is slept on. Swing trading is slept on, and it makes me very upset because the swing trading is the primary focus for institutions, and swing trading is the primary focus for anybody that does not have enough time to read the chart in real time and to be a day trader, right? And majority of people are like that, right? Majority of people have full-time jobs. Majority of people have kids. Day trading is very tough, right? And if you can't be at the chart all day, swing trading takes the spotlight. Unfortunately, in our day and age, everybody wants the day trading fantasy, and I will just say this straight up. Prop firms push that day trading fantasy and they brainwash people to basically think that day trading is easier than anything else. And you can just get your 1R, just get your 1R, just get your one. Like, no, that's not how it works. Swing trading will always be easier than day trading because you have to wait for macro levels to be presented. And guess what? The macro levels are the best levels on the chart, period. Where it doesn't matter how long you need to wait for it. It's the best zone on the chart. It's the best support on the chart, and it's the best resistance on the chart, and it has the highest probability of attracting sellers or attracting buyers. And that swing trade can turn into an investment. That swing trade can turn into, a 5, 6, 7, 8, 9, 10-hour trade just because you're getting in at those most significant areas on the charts. So let's go to the Discord and let's talk about swing trading now. So in the SPY VIP, I talk about swing trading and day trading. And in my Substack pre-market analysis and trade plan, we have a full analysis on the macro time frame, the 8-hour charts, we're bullish, the swing trading analysis, and the trade plan, of course. So let's just quickly zoom up here or go up in this channel, swing trading channel, the VIP members. And let's just go to the beginning of this week, right? So let's look for the first post I made. Let's see, we have to go back to the 13th, which is right here. All right, so this is the very first post that I made this week, Monday, October 13th, 9:40 a.m. Swing trading ideas are very clear for this week. The false breakdown of last Friday's low, and then short hedges are possible. The bull box, in the previous bull box, 67.50s and 67.60s. That's Monday at 9:40 a.m. Obviously, we didn't tag any of these macro levels on Monday. Let's keep going, and I will show you where we did get filled. Right here. Yesterday at 10:01 a.m., we are in the macro resistance. Watch for 67, 60, 75. If you want to hedge short here, that makes a lot of sense with a wide stop loss. Know your trade plan. Let's see. So this is the only macro resistance on the charts other than all-time high, of course, right? So if you wanted a hedge or you wanted a traditional swing trade to the downside, this is one of the rare times where we're going to have strong macro resistance below all-time high, right? And we talked about in the pre-market live stream today why that macro resistance was so strong. Beautiful 8-hour outside bar off of the reversal of 67, 60, 75. And obviously this was yesterday's day trade as well. So you can see time frame alignment here. We also use the macro levels to day trade. For the ones swinging the macro resistance, you can tighten your stop loss to today's high. And then we were targeting 66.80s. 66.80 got hit yesterday, 1:10 p.m. And the way we manage our risk here for the swing trades is very simple. We go zone to zone. We go structure to structure on the 8-hour time frame, right? So we're dipping almost 100 points here. And you're saying to yourself, a swing trade sometimes takes weeks to play out or days to play out. But remember, because volatility is so high, because these ranges are so massive, you can get a swing trade to play out within one session, because a 100-point move to the downside would traditionally take few days to play out. But nowadays, during this week specifically, we're getting 100-point RTH ranges. So 6680 got hit. I told everybody 6760 was our area to short for a hedge. 6680 got hit, and that was our spot to scale out. All right. Zone to zone approach, and this was the bounce off of 6680, the support at the time. Zone to zone approach for easy risk management. Let's continue on. So this is from today at 1:23 p.m. So a quick update on the swing. For those that tighten your stop to yesterday's high did not get tagged, meaning you should still have a portion of the swing trade active. Whether you scaled out 25%, 50%, or 75% at the 6680 first targets, remember we always keep something on, even if it's just a small runner. Let's see if the floodgates open up later or tomorrow. So we had two swing ideas this week to short macro resistance, 67.4150 through 67.6075. I highlighted 67.6075 when we were in the macro resistance. And then our second trade idea for swings is to long the false breakdown of last Friday's low. So let's go to the swing trading chart now. Obviously, the prior day's high did not get tagged like we talked about for the day trading analysis or the day trading recap. The prior day's high did not get tagged, meaning your stop loss is in play, meaning I'm still in this trade, right? My stop loss is tightened to the prior day's high, but I did not get poked out. And guess what? I didn't move my stop loss to break even either. That's so important for me to note. I didn't move my stop loss to break even either, because I knew that the only way for my swing trade idea to be invalidated is if we break out today's high. That's going to be confirmation that the intraday chart has flipped from neutral to bullish. Therefore, I obviously want to get out of my short swing, right? That being said, we already managed our risk into 6680. I already scaled out my position into 6680, so I feel very comfortable just keeping on this 26 points of risk, right? Actually, my entry is right there. I feel very comfortable keeping on this about 10 points of risk. From here, all my swing traders that are still active short from the macro resistance, we're targeting last Friday's low. Last Friday's low is going to be our next target, and that's where we're going to realize the swing trade position. We'll see when we get there. We'll see if the stop loss gets triggered at today's high, or yesterday's high. We're keeping our stop loss at yesterday's high, and we are targeting Friday's low, last Friday's low. When last Friday's low gets triggered, then we're going to look for a swing trade to the upside. We're going to look for a false breakdown of the Friday, October 10th low. And what I said earlier about the resistance at 67.4150 through 67.6075 having absurd significance is purely based on the contextual significance of the market structures in play, right? So last Friday was a flash crash. Last Friday was an anomaly, minus 3% move to the downside. So obviously there's a ton of supply in the zone, and there's a ton of people that were active short. Therefore, the breakdown triggers of this minus 3% move in one session is going to be more important than, for example, the breakdown triggers back on September 23rd when we were moving down in a very organized fashion. This was not a flash crash. This is very organized selling, right? And this is only a 2% move versus this is a minus 3% move in one day. So if we take a look at the breakdown triggers from September 23rd that got back tested on September 29th, there's obviously a reaction here, but it's not that significant. And then finally, buyers take over and the chart flips back bullish for new all-time high breakout structure. So it's literally the exact same thing, right? Literally the exact same thing from the early parts of October. If this structure at the prior 2-day high now, so today's high and yesterday's high breaks out, then we can anticipate further all-time high breakout structure. Vice versa, if these daily higher lows fail, then the short is still active. We're targeting Friday's low, and then we're going to swap to a potential false breakdown idea to swing trade to the upside once again. So that's all the ideas. That's all the recaps. That's the Substack and everything in a nutshell. We talked about the swing trading. We talked about the day trading. And we talked about how the performance today could have been a little bit better. The trade plan definitely could have been a little bit better. In general, we just need to remain focused on the structures, right? So I was a little bit too overly focused on the high and the low, and I kind of just didn't pay too much attention to the actual zone itself, right? And then when you factor in the real-time read, that the fact that price action is heading down into our structure, most significant intraday support on the chart, when we're heading down into it on just a complete flush, right? Exhausting the range potential, that's a fantastic area to look to long on first test. So that's all for today's session, guys. Thank you so much for tuning in. I'm going to head out here. If you guys have any questions, comments, concerns, you can let me know. And we'll be back again tomorrow to rinse and repeat the process. I'm very happy that all I lost today was 1 hour, because my main focus, honestly, for today and tomorrow is to just protect the big profits that I got from Tuesday and Wednesday's trades. If I zoom out here, Tuesday's trade was right here via the gap fill of last Friday's close. So if I just quickly recap the week so far, Tuesday's trade, Monday, we didn't have much going on Monday, but there was a decent short up here. Tuesday is really where things got hot, because Tuesday we took the false breakdown of the overnight low because of the support that we had at the gap fill at last Friday's close. And once again, remember the significance of last Friday. Anything within last Friday is extremely important, right? So we took the gap fill here, we longed the false breakdown, and we got an insane hitter. Yesterday, you guys know I've talked about this nonstop. Yesterday, we shorted the high of the day via the first test of the macro resistance. That was a monster hitter. And today, unfortunately, I was not able to short the resistance up here. And for the long down here, I got poked out. But it is what it is. It's all good. We'll come back tomorrow. We'll do the exact same thing we did today. And we'll see what happens, who gets trapped, and who is in control. That is the number one premise that we must trade by, because if you don't trade by that premise, you're probably going to get trapped. And if you get trapped, you're probably going to lose, right? Thank you guys so much for tuning in. Please read the Substack. Please drop me a like on the Substack as well. It will show the website that we are doing a good job. And thank you so much for the support as well. I got so much fantastic messages from you guys about the Substack. I have people with me that have been a part of my journey since day one, since I was 19, 4 years ago, when I didn't know what a candlestick was. I didn't know what an inside bar was. I didn't know how to draw support and resistance. I didn't know about retracements. I didn't know anything. So I had some people that had been with me since day one reach out to me, and they said they're really proud of the development. And that makes me so incredibly motivated to just continue to be better and keep going. So thank you so much for those people that reached out, and thank you so much for all the readers of all the content that I produce, because I have genuine passion for futures trading. I have genuine passion. You're not going to stick around for 4 years straight every single day getting your ass beat sometimes. You're not going to stick around and come back the next day with a clean slate if you don't have passion for this game. Passion for this game is going to carry you. If you can do it, you will be successful. If you don't give up, you will be successful. 2019 or just 19? Yes. 2019, I was just 19. I am now 23. Yeah, so 2020-ish, 2021, I was just 19. But yeah, the only reason why I can do this is because I have mentors, right? The only reason why I'm doing this is because of my mentors, right? So it's important for you guys as well to have mentors, right? I have real life professional traders that have been doing this for 15, 20 years that have been coaching me for a long time now. Primarily this year, we got really focused on the coaching, and they're very close family friends, right? And obviously my older brother, Rich, is a trader as well. Feeling so old now? Yeah, I mean, time goes by fast. Time goes by really fast. That's why every single day you have to make the best out of it. We're not going to get back today, right? When we go to sleep tonight, we're not going to get it back. And that also means a lot to psychology too. Because at the end of the day, if you make a mistake, who cares? You made a mistake, you lost some cash, whatever. It is what it is. It's not that serious, right? Journal it and be better for next time. It's not that serious. It's just cash at the end of the day. You can make back your money. That's what people forget. Or people try too hard to make back their money and they end up losing more money, right? So that's why the journal and the process is so key. So we can have the proper habits and the proper routine to actually know how to be better. Some people say all the time they want to be better, but they don't know how to do it. And I'm literally showing you guys how to do it in these team meetings and in the after hours recaps and the journaling that we do in the Substack, all of the pre-market analysis, all of the development, right? I'm not pulling this out of you know what, right? This is real life trading development from things that I've learned from real life traders. And by the way, they don't have massive social media accounts because if you're a big time trader, you honestly couldn't care less. You have so much on your plate when it comes to trading that you're not going to have a big social media account. You probably will have a social media account. You're going to be talking about the markets, of course, because social media is just a place to journal your ideas and thoughts. But you're not going to spend a lot of time marketing your ideas and thoughts to get that engagement. So you know that the people on social media, they're probably spending more time focusing on that engagement aspect of trading instead of, well, trading itself. So again, thank you guys so much for tuning in. That was a little bit of a ramble and a rant, but I mean, it is what it is. We'll just continue to be better. Please stay tuned for the Substack for tomorrow in the pre-market, and stay tuned for the after hours recap, or excuse me, the after hours Substack as well, where I'll be posting this live stream recording. Of course, you can just watch it on the YouTube, and you'll be taking a look through my ideas heading into tomorrow. So again, thank you guys so much for listening. I will see you next time. Stay focused on yourself. Write a letter to yourself. What do you want to achieve in the next 5 years? Do it, journal it, and just try your best to be better, right? I'm going to ramble a little bit more because I think this is incredibly important. Our mindsets, when it comes down to being positive or being negative, has a direct impact on our P&L. If you are a negative person or you have a negative outlook / mindset on the markets, your P&L is most likely going to be negative. And if you have a positive mindset, you have a developmental mindset, you have a mindset that you just want to learn and try to be better, then you have a very good chance of that P&L one day being green, very green, and ultimately profitable. That is what people do not talk about, and it makes me very sad because the truth about profitable trading is not actually on the charts. It's within yourself. So thank you guys so much for listening. I'll see you next time. Tradingwarz.com if you need anything, and stay tuned for tomorrow morning. See you.